It's Wednesday, July 11th. Let's level up. CPI data came in a little better than expected. I had told people not to worry too much about the CPI. We'll first start seeing inflation in the PPI, although that is going to be tomorrow and probably today when you're watching this, because I am recording this a little after midnight. We did see a very large drop in the probability of the Fed not cutting. So it seems now more likely that they will. Remember, in September, it was almost 40% chance that they wouldn't cut. Now it's only a 27.2% chance that they're not going to cut. That increases the odds of a September cut quite considerably. As far as futures go, we had this pop on the news today. Then I think some of the details of the China trade deal came out with the 55% permanent tariffs. That's pretty high, 10% on the China side. Saw a bit of a liquidation break, a lot of chop, and then I have to tell you, it looked to me like a lot of traders just took profits ahead of the weekend and decided to pack it up, particularly ahead of the PPI. We are banging up against some key resistance levels, so it doesn't surprise me to see some sellers up here at 600 or above, because if you're managing client money, it's very hard to tell them that you didn't sell 600, particularly if there's a correction that comes post that move. VIX keeps playing footsie with the 17.02 level. We've had a couple of mini look below and fails. The bears really do need to get it over at least the 20 MA at 1848 and the 200 MA at 1963. If they do, the big upside resistance has been the 50 MA, like we saw on the 523 pop. That's currently 2483 and rising. If there's a hot PPI number, we'll probably get up there in a jiff. If not, we'll probably just languish down here with liquidation break potential in the VIX. For the bulls to have a sustainable, still push higher, they will need to break and stay below 17.02 with authority. With regard to the futures, we had underwater closes, 60.3975 and 21,948, which is actually the prior 2 times range upside target. As VWAPs, those would be upside targets if we do see a bounce in the morning, particularly on PPI. Bulls will need to clear and hold those levels. If not, it could be choppy with liquidation break potential. If they do clear, we'll likely get moves back up to 60.58.5 and 22,011.5. With regard to SPY, we're currently, as of this video, playing footsie with the 599s to 600s. Pullbacks to 595.54 are still okay. Remember, that was the breakout over the 519 high. 10 MA is roughly there. The 20 MA is a little below there at 592.22 for a little bit of overshoot risk, but that zone is the must hold on pullbacks, or we likely would retest the 78.6 at 585.10. That is the absolute must hold pass or don't pass line. If we see a break below there, we could see a larger liquidation break to the 575.35 and maybe even finally fill the 5.9 gap to 564.34. I've told you I have the opinion that we may make a new high, come up, see it look above and fail, and then see the liquidation break for some type of summer correction. As of now, we haven't made that new high just yet. As far as the Qs go, banging up against resistance, the 1218 Fed day high at 536.88 up to the all-time high that we saw on 219 at 540.81. I think you could use today's low of day as a stop if you're long on at least part, 530.11. It's really okay as long as pullbacks to the 10-20 MA area. They're kind of getting close at 526.03 and 527.03 and 522.42 respectively. If those can't hold, then we would see the 78.6 at 511.19, and of course that's the ultimate must-hold pass, don't pass line for a larger correction. We did see the look below and fail of the 78.6 on 523. That's why I think we can still see the all-time highs, and we're getting very close. Apple, not a beneficiary of the tariff, still languishing below the 20 MA at 203.30. I've told you before, we need to get over the Worldwide Developer Conference 206 high for still higher prices. Anything below there sees chop with liquidation break potential, maybe even all the way down to the channel low currently at 186.33. I think if we took out high of day though at 204.5, I'd be willing to take a stab at it and then add if there's a break over the 206s. Nvidia is still playing footsie around the earnings day high at 143.17. This one seems like it wants to go higher. I think you could use the 140.60 10 MA now as a stop. The must-hold zone there is 183.90 to 140. That was the initial pop release high and the 78.6 respectively. If those can't hold, we'll likely see the earnings day low of day at the after hours 528 low at 133.25. Tesla still hanging in there. The robotaxi event coming up. Elon Musk doing his best to tease that up. I think bulls and Tesla are fine as long as the 319.03 to 325.10 level holds. Anything below there could see a liquidation break. I think the bulls, though, do need to clear the 20 MA, and if you haven't taken some profits, it's probably prudent to do so, 336.30. My call on selling Google when we got close to the 181.64 turned out to be correct. Bit of a pullback today. I'd be looking to reload that one on the 20 MA at 170 if we see a further liquidation break. I think it could ultimately get up closer to the 200 level, but we will need a sub 17.02 VIX and a trending market. We are getting up really close to the all-time highs here, so I am in profit-taking mode on pops. Amazon clearly not loving the trade news. Generally, there was just some profit-taking in the big cap tech names. I'd be looking to do a little bit of a reload on this one if we saw a pullback. Also, probably close to around the 20 MA, currently 207.34 and rising. I think the bulls there are okay, though, as long as it holds 211.52, which is the 61.8 of the range. My ultimate upside target is around the 225s into prime day. Usually that's mid-July. Bitcoin, another look above and fail. The bulls there will need to hold the 110,150 level. It is pulling back here. 20 MA to me is the must hold at 106,876. It is gently pulling back. It is technically a little bit of a lower high. I think it could consolidate here high and tight before maybe making the move up to the 126s or 127,000s, but it does need to clear that 110,150. If not, there is still liquidation break potential. Gold's hanging in there. I told you I didn't think that was just going to fall apart. It seems to still be in this bull flag and maybe even diamond formation. 50 MA there is key, currently 301.29 and rising. Bulls there would need a gap and go above the downtrend if it were to do it tomorrow at over 310.97. Bulls there really do need to clear the 316.65 for a still higher move. Again, that was the 2.618 of the range projection. So I'm still thinking we could get a pullback to 281.68. If you want to do a 1/2 put ratio playing for that, I'm good with that as well. TLT is still consolidating. You could raise your stop there to the 20 MA, 85.57. As long as it holds 84.89, it's still healthy, but I still think that there'll be sellers in the 87s. I do like doing some type of a trade where you're doing some kind of a call spread, maybe playing for a retest of the 92 half-ish zone. That area I think will get retested at some point and is likely going to be some resistance. Generally speaking, markets have moved a lot. There's a lot of concern around these big bad economic data releases because we're sort of in the gap between earnings. I think that the inflation data seems promising. We'll get another look with the PPI tomorrow. I know there's a lot of fear that the next number is going to be bad. It's always the next number. I do think that if the trade deal does iron out with China, things could get a little bit more stable, although I am leery about what's going on with Iran. A lot of U.S. personnel are being taken out of the Middle East, and there is some potential for a strike there. I don't think that there's immediate risk this weekend, though, because I know there is some high-level meetings with the Iranians, so it would be very odd for them to do the strikes right when they're meeting. My guess is it would be in the coming weeks, but something to keep on the front burner. Oil has been rallying, as we talked about, but so far it's a look above and fail with the 200 MA. If you're short, you could use 68.65 as a stop. That's, of course, the 200 MA. Anything below the 67.94, I think, is a short, probably for a pullback to the 64.92 to 65.27 level. On the upside, I told you I think we could get into the 71s, maybe an overshoot to the anchor VWAP at 73.28, but I don't think it's going to be sustainable there unless we do get the strike with the Iranians. My guess is people are going to get nervous into the weekend, but I told you they have that meeting, so it seems very unlikely to me that the strikes would be this weekend. Like and follow for more.